Hi guys, one final update, 6 p.m. London time. My trade on cable has been, the trail stop has been stopped out for plus 42 pips on the second half of the trade. Yes, that's the same as in the first half. Alright guys, that was all for today. I'll be seeing you tomorrow. Bye bye. Hi guys, this is Hector. Welcome to a new video of my Forex trading course. In this video I'm gonna be talking about consolidation areas right at the dynamic area of support and resistance, and how we can profit from those consolidation areas, really tiny consolidation areas, rather on the trigger chart than on the setup chart, and how we can profit from those from the breakout of those consolidation ranges in order to ride ride a whole new swing in the direction of the main trend for a profit. Okay. We've already seen a video, okay, we've already reviewed what ranging consolidation areas are, remember those triangles, those ranges, flags formations, etc., etc. However, before we were looking at them as an area, as a congestion area in the setup chart, in order to, well, if the trend is basically down and price gets within a consolidation area, we are gonna be looking to try the breakout to the downside, okay, hoping for some profits. Okay, well, in this case we are not going to be looking at ranges as a price pattern, but rather as a trigger in themselves. Okay, sometimes when you have a nice trend in a scenario such as this one, as per my moving averages, sometimes as price retraces back to the dynamic area of resistance, in this case since we are in a downtrend, it simply reacts of it, it gives out a clean signal, you get the let me clean up the chart a little bit, up on the breakout of the retracement trend line, or actually a flag formation. Well, this is rather a flag formation. Remember, we were just now mentioning them. Okay, on the setup chart, well, this is a clear flag formation. Okay, up on the breakout you have a nice swing to the downside. Okay, well, so as I was saying, sometimes price reacts very cleanly from the dynamic area of resistance, and therefore the entry signal is rather, like I say, clear, no confusion whatsoever. Your retracement trend line gives way, and bang, then there you go, in order to enter the market. Okay, however, sometimes the entry signal in itself, it's not so clear. Sometimes price, if we are in a downtrend and our 30 and simple moving average, this is the dynamic area of resistance, sometimes as price is swinging, it gets back to the dynamic area of resistance, and price doesn't quite react immediately of it. Okay, instead it enters a period of consolidation, all right, of basically sideways price action before deciding which way it wants to go, either to the downside or to the upside. Okay, always please remember that whenever you face the dynamic area of support and resistance in a trendiness scenario, that's a decision taking area. All right, especially, of course, as usual, if you have a confluence of different elements of support or resistance packing up within few pips of each other at that precise level. That's a decision-taking area, like I say. It's an area where the market has got to decide. Okay, imagine it retraces back here. It's got to decide whether the trend is to continue, and if it is to continue, most of the bounces will happen around this area. Okay, in order to, well, basically resume the downtrending mood in this market, and therefore scoring new lows in this downtrend, or whether the bears have had enough on this trend. Okay, they've made enough profits, and therefore they give way to the bulls, so they can gain some ground. Okay, and therefore pushing price to the upside. Basically, this area, as we can see in this chart, is the area that sort of defines whether the downtrend is to continue, and if it is to continue, it should bounce down from this area. Okay, or if it is to break, it will break this area and therefore marching forward, marching north against the trend, and therefore, from a technical point of view, as far as I am concerned, calling it a day, as far as the trend goes. Okay, so like I say, remember that the dynamic area of support and resistance is a decision-taking area. When price in a downtrending or in any trending scenario retraces back to it, the market sort of enters a battle. Okay, whether the trend is to continue or to continue down, or whether it is to breach through and therefore jeopardizing the whole trend. Okay. So, as price retraces back, we are now going to be focusing on this swing here, on this whole swing back here. As price retraces back, okay, to the decision-taking area, okay, which is this area around here, the market has got, like I say, has got to decide, and sometimes that decision is not so clear, and therefore we don't get a U-turn, such as in this case, but rather we enter a period of sideways consolidation. Okay, it's too tiny, that consolidation area, to be spotted on the setup chart. If we could spot it on the setup chart, then we would be talking about simply a price pattern, okay, as we saw in the previous videos. But in this case, like I say, it's not that the whole market enters a congestion area, we will enter a congestion area as far as the entry in itself goes around this area of decision taking. Okay, that's why the congestion area will definitely be so small that you would assume into the shorter time frames in order to to trade it, and we're gonna take the breakout of that congestion area as the entry in itself. Okay, in this downtrending scenario, just as the congestion area takes place around the dynamic area of resistance, the breakout will signal the entry. Okay, let me rephrase that. The pattern, the pattern that we are trading, the type of trading we are taking here, it's still a swing trading type of trading. Okay, it's not a pattern breakout trading. It's just that the breakout of this congestion area will signal our entry. Okay, so as I was saying, I'm sorry if this sounds a little bit confusing. Let me zoom in now into the short time frames, and I'm sure you guys will understand what I'm talking about here. Okay. Right, price retraces back. As usual, we zoom into the shorter time frames in order to search for, for a reversal formation, as usual. And now we go into the short time frames, into what I like to call the trigger chart. Let me zoom forward. Here it is. Here it is. Alright, and as we can see, as price, remember that the dynamic area of support and resistance was resistance in this case was basically coming around this area on the setup chart. Okay, so we can see that price basically enters an area, okay, of sideways consolidation. The bounce, okay, from this retracement up wasn't that clean. We did not just touch the dynamic area of resistance and swing down from it. In fact, we've entered, like I say, actually let me mark it with actual trend lines. Okay, yeah, whoops, 1 second guys, let me readjust it there, and now we have the top band of that channel. Alright, so as you can see, as this swing has as this swing has retraced back to the dynamic area of resistance, as I'm saying, instead of getting a U-turn of it, okay, instead of reacting very quickly of it, in fact, what we've just gotten is it's a ranging consolidation sideways. The entry signal, it's not so clear here, is it? You don't get a typical 1, 2, 3 formation, or a head and shoulders. You don't get a clean trend line breakout. I mean, you do get the trend line breakout, but then price sort of meanders around. It's not so clean. In fact, well, we've basically been moving in the trigger chart. We see that we've been moving sideways. Some heavy decisions are being taken around this area. Okay, some heavy decisions are being taken about at this area. If price shoots to the upside, we know that for the time being we don't want to take this entry. However, if price breaks below this congestion area, chances are the trend will continue. Okay, the main trend as per the setup chart will resume its downward sentiment, and well, therefore it's rather safe, or a short entry should carry higher chances of success. Okay. Now, as usual, there are two ways to take the entry, okay, of the breakout of this congestion area. One, the aggressive way, as you guys know already, we've already reviewed that on a previous video. You simply place a sell stop order, some pips, 5-10 pips, depending on what time frame you're trading, below the lower band of the congestion area, and as the breakout takes place, you will be automatically filled short in this trade, or you wait for the breakout pullback continuation. However, when we were talking about price patterns on the setup chart, I was always advising you to wait for the breakout pullback continuation, okay? However, in this case, it's not so bad, or it's not so aggressive to simply place a sell stop order, like I say, few pips below the range bottom, because at the end of the day, congestions are so tight. Okay, remember we are talking about the trigger chart here. Okay, we are not talking about the setup chart. In the setup chart, if you're spotting a congestion area in the setup chart, you definitely want to be requiring a breakout pullback continuation pattern in order to enter the trade. If the congestion area happens in the trigger chart around the dynamic area of support and resistance, and we are using the breakout of that congestion area as our very entry signal, it's not so bad to simply place a sell stop order a few pips below, beyond the breakout point. Okay. Like I say, the ranges are so tight and so small that sometimes you don't quite get the breakout pullback continuation. In this case, we did get it, okay? We did get it there, but sometimes in this type of setups, you don't get it, all right? So it's not such a bad idea to simply place a sell stop order few pips, let's say 10 pips below, depending on what time frame you're trading, okay? Let me now show you another example. Well, of course, I didn't mention it, but of course, if this area breaks to the upside, it's rather obvious that you don't want to be taking that breakout. All right. All right. Now let me show you another example. In this case, I'm gonna we are looking into the Canadian dollar against the CHF on the 4-hour time frame, and all the nice uptrending scenarios per the moving averages. Swing information of the dynamic area of resistance. There is a crossover there, but for the sake of this video, let's not pay attention to it. Okay. I'm gonna be focusing now on this swing down here. Price simply, like I say, let's not pay attention of that crossover. This is just this video. I'm not reviewing any actual trade. It's just a theory video, and I want you guys to understand the concept. So I'm gonna use this video nonetheless. All right. Okay. I'm gonna be focusing on this swing up and then on this retracement down back to the moving averages. And well, price, once it retraces back here, now we would, as usual, zoom into the short time frames, see what's panning out there, in order if we get some indications that price might be turning around, and therefore we can join long for a new swing to the upside. All right. So let me zoom into the trigger chart. In this case, the trigger chart will be the hourly time frame. I'm scrolling back. There it is. I'm scrolling back in my charts, and I find this is the retracement I was talking about. Okay. Price, as we saw on the setup chart, retraces back to the dynamic area of support in this case, since we are in an uptrend, and as you can see now on my screen, in the shorter time frames, we enter another area of congestion, but in this case in the shape of a triangle. All right, a very clean triangle. All right, as usual, what we will be looking for is to trade a possible breakout to the upside. Price retraces back to this decision-taking area. A little bit of meandering of indecision, let's say, takes place here. The market still doesn't quite know whether it wants to continue with the trend or whether the trend has got to end and therefore break into the downside. We still don't quite know. So what we do is, as I was mentioning in the previous example, we simply wait. Okay, we mark our congestion area. In this case, it takes the shape of a triangle. It finally breaks up. Okay, we have the downtrend, the retracement trend line, the overall retracement trend line down there. We may want it to give way before taking an entry, so perhaps it might not be a good idea to enter the long entry right there as the triangle gives way. In fact, perhaps it would have been a good idea to wait for the trend line to give way. So we've had two confirmations. Firstly, this very short intraday price action, this triangular formation at a very decision-taking area, breaking in the direction of the main trend. We have few pips above the retracement trend line. Just for the sake of it, let's wait until that trend line gives way, and once that trend line gives way, bang, we've got green lights to simply punch the buy button. Okay, and well, there it goes. Okay, let me now show you another example, yet another one. Why not? In this example, we have another trending scenario as per the moving averages. Also, I'm gonna be focusing on this swing here. All right. Also, we have an area of confluence around there. We have the previous swing high. Former resistance now working as support. Also, we have a Fibonacci level at that level as well. It's the 61 Fibonacci level, which is actually holding price above, etc., etc. Okay, price retraces back on the last swing, okay, in the direction of the main trend. We have a new swing making new highs. We go through the swing tops out there, we go through the retracement part of the swing, and then we don't quite get a clean pullback, a clean bounce like in here, right? We enter a period of sideways consolidation. Do you see that? It's just so tiny, okay, so tiny that you cannot quite see it on the setup chart. You've got to zoom into the short time frames, but the important thing is that it's taking place at a decision-taking area. Okay. So in order to verify whether we can profit from that or not, we simply zoom into into our trigger chart. In this case, the 15-minute chart. Let me scroll forward. There it is. Okay. This is the former swing up, then the swing down, and then we, as I was saying, we don't quite bounce up straight away. Okay, instead we move sideways, and once again, what we form, it's another clean triangle. It's another clean triangle. Okay, very clear triangle, you can see that. Also, we have the overall retracement trend line somewhere around there, which actually gives way. Okay, it gives way. It's always whenever you are trading, you are swing trading, okay, trying to exploit the whole new swing in the direction of the main trend. It's always a good idea to wait, no matter what type of reversal formation you are trading, guys. It's always good to wait for the breakout of the retracement trend line. Trust me, it's a big plus. Okay, it's something you definitely want to wait for. Okay, it means that the bears that were basically retracing back price in this uptrend. Okay, the bears have been in control, at least from a temporary point of view, retracing back, pulling price down to support levels, and once the trend line gives way, it means that the bulls, which were in charge in the setup chart, since we are in in an uptrend, regain control, and bang, price goes to the upside. The actual indication that the bears are running out of steam is the breakout of the retracement trend line. Okay, so always keep in mind the you always want the retracement trend line to give way before entering any type of trade. Okay, right. So the even though the trend line has given way, the signal is not that quite clear. All right. Once again, we enter in a decision-taking area. Remember, we have a confluence. We had the Fibonacci level. We had the previous swing high, former resistance, now working as support, and in the dynamic area of support as well. So basically, we're at the decision-taking area, and the market is not quite sure which direction it wants to go. All right. It just doesn't want. It just doesn't know. At least from an intraday point of view, from in the trigger chart, we can clearly see this triangular formation. Okay, so as I was mentioning before, should the triangle break to the downside, the whole setup will be cancelled, no entry will be considered. If the breakout takes place to the upside, it's green lights. Okay, since we've broken already the retracement trend line, upon the congestion area breakout in the direction of the overall main trend, it's green light to trigger our long entry, and bang, there we go, another 80 pips to the upside. In this case, we do get the breakout pullback continuation, as I was saying in the previous example. Sometimes it does happen, okay, sometimes we get it, and well, you know, great, we have an extra confirmation that the breakout is valid. Remember that the breakout pullback continuation is nothing but the confirmation of the breakout. Okay, so you know, once we see this breakout pullback continuation pattern, we have the confirmation that well, you know, this pattern is confirmed. Okay, this breakout of this pattern is actually confirmed, and we have green lights with all these elements in our favor. It's a high probability trade, like I say, good to go for 80 pips. But nonetheless, sometimes, as I was saying before, you don't quite get the breakout pullback continuation. It's such a small time frame. Sometimes you just don't quite get it. Okay, so it's equally valid to simply place a buy stop order 10 pips, 5 pips, 15 pips, once again depending on what time frame you're trading, and from that well, you know, ride the breakout in the direction of the main trend with the trend line, with the retracement trend and having given way, with the congestion area having given way as well in the direction of the main trend. Buy, you know, up on that breakout. Once all that indecision, okay, has actually you know, has actually broken in favor of the bulls, which at the end of the day were the guys in control in the setup chart. Okay, so that's why we are in an uptrend. So once this congestion area gives way, well, we are good to go to enter long, and like I say, ride a new swing to the upside for profits. Okay, that's basically for this video. To wrap it up, as usual, as price retraces back to the dynamic area of support and resistance in a trendiness scenario, you zoom into the short time frames and you simply follow price action at that precise level. Okay, this is the previous example I was showing you before, right there. What's price doing up on the pullback? Okay, price pulls back. What is it doing? Is it simply pulling a U-turn, such as in here? Or it's rather, you know, meandering sideways. We can clearly see the same phenomenon on the last example that we just saw. Let me clean up the chart. What is price doing? Okay, is it well, first of all, is it breaching through? Is it, if it does indeed breach through, I'm not interested in this setup. Is it, you know, simply bouncing, you know, in a V shape formation with a clean trend line breakout, etc., etc.? Then great, I'm good to go to search for an entry in the direction of the main trend. But what if it actually enters sideways, you know, a period of congestion, a period of sideways price action, and we don't quite get a clear signal? Well, in that case, in the trigger chart, as I was just mentioning, you want to mark the congestion area, and as the congestion area gives way, in the trigger chart, it's a reasonably safe bet that the new swing will, it's about to spring off. Okay. Alright guys, that's all for this video. Just another type of entry. I wanted to mention this type of setup because they do happen, okay? You sometimes do get this type of tiny congestion areas at decision-taking levels. And that's why I wanted to mention how to profit from the breakout of those tiny congestion areas in the direction of the overall main trend as per the setup chart, in order hopefully to ride, for upon the breakout, to ride for a new swing to the in the direction of the main trend. All right. Okay, guys, that's all for this video. If there is anything you didn't quite understand about this concept, as usual, feel free to send me an email. I will very gladly get back to you as soon as possible. But as usual, the best thing you could possibly now do is to scroll back in your charts, okay? Search for those trending scenarios. Analyze the pullbacks, draw some retracement trend lines, some confluences of support and resistance, and see how price behaves once the retracement hits those areas of confluence of support or resistance around the dynamic area. See how price behaves around that, and always ask yourself those three questions. Okay, what's price doing? Is it either breaching through? Is it either bouncing back up, or is it moving sideways? Okay, and from there elaborate your trade plan. If it breaches through, okay, you don't want to take any entry, and if that level of confluence of support in this case, hold price above it, and if it begins to turn around, how can I search for an entry? Okay, what type of reversal formation can I profit from? Has my retracement trend line giving way? Great, that's always green lights, okay? That's always a big plus on my list. Am I finding a reversal formation, perhaps a 1, 2, 3 reversal formation, a W formation? Am I finding a head and shoulders? Am I finding a sideways price action in the trigger chart? If you find any of those reversal formations, once confirmed that the retracement trend has given way, upon the confirmation of that reversal formation, right there you are good to go for a long entry, for an entry in the direction of the main trend, because chances are that the new swing is on the move. Okay, that you are stacking up chances on your favor. Alright guys, that's all for today. Bye bye.
Hi guys, this is Hector. I want to show you a setup that actually looks, it did look quite good, but unfortunately I didn't take it. I've missed it because I was studying another chart at that precise time, and well, the opportunity now is gone. But nonetheless, I want to show it to you guys because I think it's been a good opportunity and a good possible trade. All right. It's the Australian dollar against the American dollar in the 30-minute chart, and as you can see, well, we're seeing a nice downtrend on the 30-minute chart. Okay, with the moving averages pointing down. There is a nice downtrend right there. Also, if you measure this downswing, it retraces up to the 38 Fibonacci retracement. We have the 08200 round number. Also, this area had been working formerly as support, now as resistance, etc. This is definitely a nice trend, at least from an intraday point of view. All right, and it's definitely a nice opportunity. Such a shame I missed it. Okay. However, what I want to show you in this video is how the actual trigger worked out. It's interesting because it's one of those trades in which you can use the breakout technique, okay, in order to trigger your entry. This is the 30-minute chart, so if we zoom into the 5-minute chart for searching for a trigger, we will see a nice formation. All right. It is right here, okay? That's the area that in the 30-minute chart, if we go back to the 30-minute chart, that's the this area I want to comment on, right, when the retracement goes all the way up to the dynamic area of resistance, and the confluence right there, all the confluence of all the factors that I've just mentioned, all right? So in the 5-minute chart, okay, we see a nice formation that you'll probably recognize it very quickly, all right? It's a triangle formation, okay, and the breakout of that triangle can be used to trigger our entry, all right? Do you see this triangle, guys? Right there, all right? You see that? How we when we reach the area of dynamic support and resistance, the price in the trigger chart forms a triangle, okay, and the breakout of that triangle in the direction of the main trend, okay, meaning that a breakout to the downside actually has given out a very nice opportunity to enter the trade, and that's why we're I usually, as you know, the way I personally tried the triangles is by waiting for the three aspects, okay, that I always mention. You know, if you have any level that you want to break out from, okay, let's assume this is the triangle we want to we want to try the breakout from, okay. You have the triangle, the consolidation, then you wait for the breakout, okay, the aspect number 1, the aspect number 2 being the pullback, and the continuation of that move, okay, being the aspect number 3. And as you make new lows, you will trigger the short entry and the stop loss being up there, all right? So if we look at this triangle, all right, okay, we have that triangle forming right there in the trigger and the trigger chart, okay. We see that we have the breakout, then we have a 1-bar pullback. You see that green bar down there, and in the bar following after, okay, this happens very quickly because at the end of the day this is the intraday trade, okay. It's a 5-minute chart, okay, so it's a trade that it happens very quickly. You've got to be very nimble to pull the trigger, all right, because the setups come and go within 15 minutes, at least the trigger, all right, like in this case, okay. We see that we have the breakout, the pullback with that 1-bar pullback, the green bar, you see, retesting the bottom of this triangle, of this uptrend line right there. You see that? And in the bar immediately after, we trigger the short entry right there, as we right there. You see that? That will be our entry. Let me mark that right there. Okay. Generating a new swing down in the direction of the main trend, okay, in the direction of as seen by the moving averages in the 30 minutes time frame in our setup trade, okay. So like I was saying, you've got to be very nimble, all right, to when you trade such a short time frames, because the breakout, pullback, and continuation occurs within 10 minutes. Okay, you gotta follow it, this chart in real time. All right, but nonetheless, the point of this video is to show you how you can actually trigger an entry using the all those breakouts techniques that we reviewed in the previous chart. Okay, in the entries chart. When they occur at a confluence of levels of support or resistance in the area of dynamic support and resistance, search for either reversal formations like 1, 2, 3 formations, or M formations. Okay, if it's a double top, or a W formation if it's a double bottom, etc. Okay, and trade the breakout as you would trade any other breakout. Okay, aspect number 1, aspect number 2, and aspect number 3. If they occur at the right area, okay, as we've seen in the 30 minutes chart, okay, we had a number of factors working in our favor as working as resistance. Okay, right there. All right. we saw the previous swing bottom, the round number, the 38% Fibonacci for the previous swing, and of course the dynamic area of resistance as well, the trend line. All right. Search for any reversal formation in the shorter time frame, okay, because they usually give an idea, okay, as of when or in which direction the next swing is going to take place. Okay, in this case, the signal came in the shape of a triangle breakout. Okay, 1, 2, you see that green bar, and 3. All right, guys. Well, that was all. Bye bye. Hi guys, this is Hector. Today is the 1st of June 2007. It's 10:15 a.m. in the morning, London time, and well, I've got some time. Seems like market are pretty quiet today, Friday. So I've got some time. So I thought I could perhaps show you the setups that I'm looking into trade today, or at least I'm following today, that seem appealing to me. The first of all is the Euro CHF. Okay, I'm seeing in the daily chart a bounce of the dynamic area of support in a nice trend. Okay, with the moving averages all pointing down, parallel to each other, etc., etc. And if we zoom in the 4-hour chart, we see a trend line break. Okay, to the upside. You see this trend line right there. Okay, it was tested there, and we've just today we've broken to the upside. So zooming a little bit further into the shorter time frames, we see more clearly the up thrust that we've seen today. Okay, nice thrust indeed. Okay, with momentum, plenty of green bars all pointing to the upside. Okay, and now what I'm waiting for is a retrace. Okay, perhaps to retest yesterday's higher. Okay, right there. Or perhaps the actual trend line from the from above. Okay, basically we had the thrust, and I'm waiting for a pullback. Okay, in the 30-minute chart already the moving averages are pointing up. Okay, and an uptrend is being formed. So basically, like I say, what I'm looking into is a possible retrace back to this area, and then from here search for a long entry. All right. Okay, that's the Euro CHF. Let's go now into the Euro Canadian dollar. This is the second trade, the second chart I'm following today. In the 4-hour chart, we see a nice downtrend with the moving averages again all placed the way I like them to be placed. Okay, as I explained in the course that I'm preparing. Also, I see a nice triangular formation. Okay, right there, and what I'm looking to, what I would like to see is a breakout to the downside. Okay, a pullback and a continuation of the move to the downside. Okay, any breakout to the upside for the time being, at least for today, Friday, would cancel the whole thing. Thirdly, what I'm looking into the GBP is the GBP Australian dollar. Nice downtrend on the hourly chart. Okay, with a level that's been working as a support a few times. This level right below the 239 round number. It's worked as support there, and then it worked as resistance this morning, early in the morning, right there, and now we are retesting it. Okay, moreover, the downtrend, okay, from the last the intraday trend line from yesterday, coming from yesterday's high right there, it's been tested there, and now it's been retested once again. Okay, and now if we move into the intraday time frames, I'm seeing that the trend line is breaking to the downside. Okay, the direction that I'd like to I like it to break. Okay, so basically I'm just looking for my typical formation. Okay, in order to trigger my short entry right there. Okay. And lastly, now the Australian dollar against the GBP, the JPY, sorry, the Japanese yen. In the 30 minutes chart, we're also seeing a nice uptrend, okay, as per my moving averages. We are now retracing back into the area I like to buy from, which is the dynamic area of support. Very beautiful moving average formation, okay, retesting yesterday's high, and also the 50% Fibonacci level, which, as you guys know by now, is my favorite Fibonacci level right there, okay, and retesting, like I said, yesterday's high right there. So in the short, this is the 30 minutes chart, so in the 5-minute chart I'm going to be looking into any possible any possible reversal formation, okay, breaking this trend line that I'm marking now in red right now. As usual, if this level breaks to the downside, at least I will cancel the setup for today. What I'm looking into is my typical formation, okay, my typical reversal formation with a trend line, with an intraday trend line break to the upside, okay. Well, those are basically the four setups that I'm following today. Like I said, I just wanted to just a quick update. Market seems pretty quiet, so I had plenty of time. So I said, well, why not showing it to the guys, okay, and upload it to the into the website. Alright, guys, I'll pause this video. If any of the setups trigger, I will let you know, okay. We have today, in a few hours time, in about 3 hours time, we have the non-farm payrolls, okay, which is, as you guys know, is a massive fundamental news coming out in the market. Probably one of them after the interest rates decisions from the central banks. The non-farm payrolls is the biggest announcement of the month. So gotta be very careful with any trade around that area. Okay. All right, that's all for now. Goodbye. Hi guys, this is Hector again. Just a quick update to let you know that I've triggered my sell order on the GBP Australian dollar 1 minute ago. So you can see that's my entry level right there. I've just triggered. Let me zoom into the 5-minute chart. It's I've seen a trend line, a retracement trend line breakout. Oops, my Windows, my Outlook has just crashed. Anyway, breakout of the retracement trend line with a pullback and continuation making new lows. That's my entry. Stop loss. I've stretched my stop loss a little bit. It should have been right there, but it was just so close. It would have been just a 5 pip stop, 10 pip stop loss, and that's way too. That's way too short. Okay, so I've decided to stretch it above this level that I'm basing my trade on. Okay, this level right there, that's been working multiple times as support and resistance, and furthermore I've stretched it another 5 pips above the 239.00 round number. Okay. That's well, that's basic. Oh yeah, the target. The target, as usual, measuring the whole potential move of the trade, takes me down here, but we have the round number, the 238 round number, about 20 pips above. I don't want to have that mark in the middle of the way, so I've placed my stop loss a few pips above that 238.00 round number. Okay, I'm giving up perhaps about 20-25 pips of this move, but nonetheless, I don't want to risk it. Okay, I'm very conservative with my trades, with my targets, so that's I've decided to cut short my target for 20 pips. I'll take half of my position at the low of the day and move stop to break even at this precise level, 238.40 right there. Okay, half out at this point, and stop will be moved to break even, and I will let the second half of the trade run to its full potential target. Okay. well, that's about it, guys. I'll pause the video now and I'll let you know. I'll keep you updated. Bye bye. Hi guys, this sector, just a quick update to let you know that I've taken half of my position out on my left account right there at plus 20 pips, and I've moved to stop to break even. Alright, bye bye. Hi guys, it's been about 20 minutes since the last update. I'm gonna call it today. It's 3 pips away from my target, and it's a beautiful day outside. It's 4 p.m. Euro time, and I just want to go out. So how did you do this thing? 1 second. Okay. That's the demo account, and 1 second. All right, I'm out of it in my live account too. Well, that's it. Recapping a little bit. Entry was right there. Exited right there for plus 20 pips in my in the first half, and I just exited for plus 51 on the second half of the trade. A pretty stress-free trade. The entry was exactly right there. Right there it was the entry. Somewhere around there is where I took half of it out, and I've just taken the second half out. Okay. Well, guys, that's all. A profitable day. I had 4 setups, 4 nice-looking setups. I took one of them. And that's about it. It's time to call it an end for the week. All right. Well, enjoy the weekend, guys. Bye bye. Hi, guys. Just a final update because my shift is about to finish at the markets for today. This trade is still open. So far, plus 20 out of the market. That right now the second half is at plus 25. Came within 5 pips to stopping me out, but it has bounced back down. So I'm just going to let this thing run to its full potential target that I'm calling it a day. All right. I guess I could show you, why not, what's been going on in the other 3 pairs that I was following, if you remember. I don't know if you guys remember at the beginning of the video I showed you, at the beginning of the morning, and at the beginning of the video as well. Anyway, I was showing you the 4 setups that I was following for today. The first one was this one, the GBP Australian dollar, the one I am in the trade right now with plus 20 pips off the table and plus 26 right now on the second half. The second one was a breakout of this triangle in the direction of this triangle, in the direction of the trend to the downside. It did a breakout, and I zoomed into the trigger chart, which is this one, the 15 minutes chart, and we got the breakout, the pullback, and the continuation aspect right there. You see this green bar. Okay, it was a barely trade from a technical point of view, but why I didn't take it? Why I didn't take it? Because it came out at right at noon London time. Okay, it was actually 15 past 12 in the afternoon in London, right there. And as you know, I stopped trading after I stopped trading at London noon. Okay, I don't like trading in the Friday afternoons. It's one of my golden rules, as I explain in my site. It's been a profitable week, and I am very apprehensive when it comes to trading beyond the noon hour in London time. It's always risky. But nonetheless, it's nice to see that my pre-entry analysis was correct. Okay, if actually this trade has already given out its full potential target, as I usually as I mentioned in my website, how you measure full targets for triangle breakouts is you measure the widest range for the breakout and you add it to the breakout point. Actually, it's shot about 10 pips below its full potential target so far, right there. But anyway, like I say, nonetheless, it's always nice to know that well, your technical analysis was correct, even if you didn't profit from the move. That's the beauty of trading with the trend, with the moving averages on your side. Okay. You're trading with the market sentiment, on pushing you along, okay, and well, that's why you have a much larger win-loss ratio, much better win-loss ratio than if you trade against the trend. Okay, the other setup that I was following for today was the Australian dollar against the JPY, which also triggered. Okay, I don't know if you remember, guys, I was following this setup right there, okay, for a retracement back to the dynamic area of support, okay, right there. Also the 50% Fibonacci level, the previous swing top working before as resistance, now as support, right there, etc., etc. Okay, so what I was looking for, it was for a move to the upside, okay, to the upside right there. And once again, it's proven right. It's proven, well, like I say, you are trading, or well, in this case, I was trading in the direction of the main trend, and that's this is what happens when you trade in the direction of the main trend. Just things come much easily. Okay, I did not take this trade, and once again, I'll tell you why. I did not take this trade because the entry was signaled there, and at this time it was 2:30 p.m. Okay. Once again, I don't trade in the past noon time, Euro time, and this signal came way after that time, and I just don't like being in the market a few hours before the weekend, the markets close for the week. Okay, I just don't like it, so I did not take this trade. Anyway, this is an Australian dollar, okay, currency pair. This is an Australian related currency pair, and in the other trade I am already short on the GBP against the Australian dollar. All right. So I know that one of my golden rules is to not overexpose yourself to the market. So if I am already in a trade with in a currency pair with related to the Australian dollar, I will not take any other entry until my stop loss is moved to a break even. At this time, my stop loss was still not at break even. Okay, so break even. Okay, so well. In my other trade, so I couldn't possibly take this trade. Let me explain you the reasons. As 1 second. Okay. Let me explain you the reasons of I mean, why would I enter? Why would I have entered at this time? Okay. As we saw on the 30-minute chart. This was my setup chart. Okay, I was looking for a bounce off this area. This is a decision area. It's an area where loads of elements of confluence, okay, come together around the area of dynamic support. Okay, like I said before, previous swing top, 50% Fibonacci, dynamic area in itself, etc., etc. Okay, at this precise time, at these levels of support and resistance, the market is bound to take a decision. Okay, it's a decision-taking point, and those decisions can be signified in the chart in different ways. Okay, sometimes we get a very sharp bounce. Okay, sometimes we get a bounce and a nice move straight away, or sometimes the market, goes through a period of indecision, brief indecision, and that's what happens in this case. We saw a consolidation range at that precise time. Okay. Let me scroll. This is the 5-minute chart, sorry, and this is what happened when we reached this area of decision. Okay, at this precise time, the market had to decide whether to break below the area of support or to bounce to the upside, continuing the uptrend. Okay, at this precise time is where the war is fought. Okay, where the battle is takes place between bulls and bears. What's the market gonna do? Is it gonna break below this area of support? As I was saying, the 50% Fibonacci, the previous swing top, etc., etc., the dynamic area of support, etc., etc. Will the bears win the battle, and therefore we will break that area? Or, in the other hand, will the bulls win the battle, and the uptrend will continue making new highs? Okay. Well, in this case, the bulls won the battle, and well, we after this period of consolidation, after this battle, we had a breakout to the upside, retrace, continuation. Do you see this red bar right there? Do you see that? Okay, this is the breakout routine that I always follow. You have a level you want to break out from, and you wait for the breakout, pullback, continuation. Well, you have that right there. With that, I'm going to zoom in a little bit for you guys to see it better. Alright, you see that? Okay, this is the range I was seeking to break from. Beep, 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 bang, breakout to the upside, retrace, continuation. My entry would have been right there, my stop loss would have been right there, and well, as you can see, it's been a winner. I didn't take the trade, like I said, I didn't profit because of my own money management rules, but nonetheless the analysis from a technical point of view was valid. And finally, the other chart I was following was the Euro CHF in the 1 hour time frame. Once again, let me recap so you guys remember. We had in the daily chart a retrace back to the dynamic area of support. Previous swing top, former support resistance, now working as support. It's basically, as you guys can see, I tried over and over and over the same type of setups. Okay, this setup is basically extremely equal or extremely similar to the one I just commented on the Australian JPY. Do you see? Swing up, retrace back to the dynamic area of support, previous swing top, working formerly as support, now as resistance. We have a swing up, retrace back down to the, oh man, I'm messing this up. Okay, retrace back down to the area of dynamic support, previous swing top, former support, now working as resistance. Breakout of the retracement trend line, breakout of the retracement trend line, shooting up, and now in this pair, what I'm looking is for another move to the upside, just like we've seen in this one. The only difference is that this is the 30-minute chart, and this is the daily. And this is the daily chart. So therefore, whatever happens in this one is much quicker than in this one, of course. But this is what's happening in the intraday action. I am basically looking for the same kind of move, but in the daily chart, so it's going to take more days to unfold. But nonetheless, it's a very similar setup. Like I say, I tried very few setups. Okay, I only take 3 type of setups: the trend trading, which is this one, okay, swing trading to be more accurate, breakouts, which is the one that I've just showed you on the Euro Canadian dollar, okay, this triangle breakout, and the London Open breakout. Today I didn't see any London Open breakout type of trade. You can see that yesterday I took a London Open breakout actually, and the day before one actually too. So if you want to review my blog, you will see a few examples. Like I said, I only tried 3 types of strategies, and well, that's basically what I do over and over and over and over. Anyway, so this is the daily chart, zooming into shorter time frames. If you remember, I was looking for, this is the retracement trendline that we've just broken. If you remember, I was waiting for the same pattern I always tried: breakout thrust, pullback, continuation. A pullback to previous support, resistance area, now working as support. 2 elements coming together. Round number 16500, round number right there. Previous swing top, now working as support. Previous swing, support, resistance, now support. You guys, I mean, it's basically the same thing I tried every day. Okay, I show you in every videos. I keep on doing this because it works. Okay, it just works. All right, so I don't know. That's why I like to show you these kind of videos, because perhaps you might learn something from them. Anyway, I'm not gonna follow this drive because now it's 4 p.m. In Europe, and well, my like I said, my trading shift is finished. So the only trade that I have open today is this one, the GBP and the Australian dollar in the 30 minutes chart. It's looking good so far. I took half here for +20. Now I am +33. +33. This is my final stop, and my stop loss is my final target. My stop loss is moved to break even, which, by the way, I haven't moved the stop to break even in this demo account. This is just my charting account. I take my trades in another platform. I just take the trades here demo so you guys can see my entry and exit levels. I forgot to move the stop loss from in this demo account to break even. But anyway, my stop loss in my real account is right there. Okay, this is my final target, which I hope it will be touched today. It's only 20 pips away. And well, anyway, that's oops. It seems like it's actually gonna be touching very soon. I feel curious now to perhaps leave the video running or not, so you guys can see it. Well, I'll tell you what, I'm gonna pause the video, and I'll resume it in a few minutes. All right, bye bye.
Hi folks, this is Hector. Welcome to a new video of my Forex trading course. In this video I want to be talking about the importance of reading price action around the area of support and resistance. Especially when price enters in a period of consolidation. Okay. As I was mentioning on the course, when we have a clearly trending scenario, price is bound to eventually retrace back to the area, to the dynamic area of support and resistance, to the moving averages. All right. Every swing is formed by 2 waves. One, the impulse wave in the direction of the main trend, and then you have the retracement, which more often than not, if the trend is strong, it usually gives way to a whole new impulse, okay, in the direction of the moving averages, followed by yet again another impulse, another retracement wave, etc., etc. Okay, the stronger the trend is, the more following impulse and retracement waves we will have one up on the other one. Okay, it all depends how strong the trend actually is. What's important is to read price action once the price has actually retraced back to the moving averages. Okay, once the retracement wave has concluded, okay, price comes back down to the dynamic area of resistance, and from there, as I always say, it's a decision taking area. There are 2 possible outcomes: either price bounces off it in the direction of the main trend. Once the retracement is concluded, the bulls show up in this market once again, and therefore a whole new swing springs out, okay, from this area. Or the other possible outcome is that the dynamic area of support doesn't quite hold the retracement, the bulls fail to show up, and from that, price breaches the dynamic area of resistance, of support in this case, since we're in an uptrend, and therefore, well, it's a clear signal that the trend is actually weakening down, okay? The reason as of why this happens is twofold, okay? Firstly, there are two, like I say, there are two events that take place at the same time, and they basically leverage each other, all right? Like I'm saying, when we have a clear uptrend and price retraces back to the moving averages, okay, once the retracement impulse concludes, and therefore price retraces back to the dynamic area, there are two possible outcomes, as I was saying before, okay? Now I want to be assuming that since we've already seen and we've already determined what happens when the bulls actually begin to show up on the retracement, and therefore price begins to take off in the direction of the trend. We've already reviewed that in previous videos. Now I want to be talking about what happens once the bulls actually fail to show up on the retracement, on retracing back to the dynamic area, to the decision-taking area. What happens if the bulls fail to show up, all right? In this market, as I was saying before, there are two events that may take place at the same time, and they leverage each other, okay? They basically strengthen each other, right? First of all, it's what's usually called in the market the bulls panic, all right? Basically, all the people that have been long in this trend, okay, there are people who entered here, anywhere along this trend, they've been making money, okay? They are in the money, they've been holding their positions, perhaps they've been adding upon every retracement, they've been adding to their long positions, okay, and therefore building up their onto this trade with further lots, okay, with further contracts in this particular trend. Well, once price retraces back down, they are ready to, well, if price turns around and the trend proves itself that it still is valid, it's still strong, and they will be more than ready to load up long again and keep on building their long position on this trend for as long as it lasts, okay? That's what most of the long-term investors, actually large investors such as banks, hedge fund managers, etc., that's their main trading strategy, all right? You've probably heard before the concept of buy and hold, okay? It's basically you spot a trend, and at every breakout, at every new swing, you buy and hold your position, you buy once again and hold, you buy and hold as long as the trend lasts, okay? Once the trend begins giving signals of weakness, well, you exit out all your positions, all right? Well, when price actually fails to continue with the trend, like I'm saying, the bulls panic shows up, okay? All the people who had been long in this market perceive that this is a decision-taking area, and any possible breakout to the downside will be basically taken as an early warning of weakness in this trend. So what they do is they are very quickly to close down all the positions that they've been opening all along, okay, all their long positions in this trend. As soon as the breakout takes place, they close down their positions because they don't want to give all these profits. They don't want to give all these profits back to the market, okay? profiting from trading is difficult as it is, and the last thing you want to do is, once you are actually in profit, is to give them back to the market. Okay, so at the first signal of weakness, like I say, all the bulls fall in panic, and they close down all their positions, and therefore propelling down price against the trend. Okay, as the more long positions are closed, price speeds up to the downside. Okay, and the second event is actually the opposite one. The bears, the people who wanted to sell short this market, they see this their opportunity, perhaps a trend line breakout, something like that. Okay, and at the first breakout, they join short in this market. Okay, basically what they are identifying is the end of this trend, and well, they've been waiting for a long time for this trend to finish, and once the breakout actually takes place, they say, all right, this is my chance. I am reloading short. Okay, I am mortgaging the farm, and I'm betting on a bear market from now on. Okay, in my opinion, in their opinion, this uptrend is finished, and once the breakout takes place, okay, once it's confirmed that the trend is actually weakening, they reload short right there, and therefore, just as we saw before with the bulls panic, these new short positions speed the drop down in price, and therefore it's usually what you see is quite a heavy momentum. Once the breakout actually is confirmed, what we see is a massive acceleration against the trend, okay, or what it had been the trend. Now this trend is probably broken, and therefore it's not strange to see a massive red bar, okay, such as this one, okay, because those two elements I was just saying before, those two reasons, they strengthen each other. The bulls get out of this market, and the bears decide to show up. All right. So like I'm saying, usually when price retraces back to the dynamic area of support, when we see basically an indecision around this area, the bulls and the bears are battling each other. They are trying to decide whether this trend should continue or break. The outcome is rather momentum filled. Okay, whichever way it's supposed to go, the outcome will take place in momentum. All right. So now that we've spotted this last swing, okay, the retracement back to the dynamic area of support. Let me zoom in now into the what would be our trigger chart, which is in this case the 4 hours time frame. I am showing you this example because actually I was looking to try it myself. All right, this actual setup. In fact, if we draw some trend lines, we can see that the retracement part was actually a flag. Okay, actually let me go back into the 1 hour time frame. All right, we had a clear flag formation, which we saw the flag formations in chapter number 2 of this trading course. Here is the pole of the flag. Here is the flag in itself. All right, and I was looking to try a breakout to the upside. Okay, so looking into the 4 hours time frame, which in this case it was my trigger chart, we identify the flag formation. It's a very clear flag formation, all right, with multiple swing highs, okay, topping out at the flag stop, and multiple swing lows, bottoming out at the flag bottom. All right, basically I was waiting for my typical breakout pullback continuation pattern. Okay, very typical formation. In fact, I was searching for an entry right above this level. Okay, this is the breakout, this is the pullback. You see that? You see up on the breakout pullback pattern. From there, I was seeking to try the continuation. I had my buy order in this case right there, about few, right there, about 10 pips above this swing high. But in fact, what price did actually, if we have a closer look in the up on the breakout in the following days, price had basically been moving sideways. Let me mark that sideways price action in blue in my screen. There's the top of the sideways range. That's the bottom of the sideways range. Okay, up on the breakout and the pullback, price began to move up, okay, but they just could not breach through breakout from this sideways range, which in fact it had been in place for 1, 2, 3, 4 days, 4 days in place. All right. Upon this breakout and pullback, price was it was time for price to begin, for the bulls to begin to show up in this market. Okay, the trend was clearly up in the setup chart. Moreover, the retracement flag, okay, the retracement channel in the trigger chart had been broken and had been retested from above. It was time for the bulls to either show up or die. All right, there was no more, hesitating about, no more messing around. It was either push price in the direction of the trend, or well, basically you are giving green lights for the bears to take control of this situation and bring price down. All right. In this case, the bulls basically failed to break up on the breakout of the retracement trend line to break this sideways price action. All right, I am sure many buy orders were placed around here, around this area, and once all the people who were looking to enter long in this market, once they saw that their buy orders did not get triggered, I am sure many exited once they saw that the actual breakout took place to the downside. If they had been long in this market, I am sure many of them closed down their long positions at this level, and have a look what happened. Bang! Price fell about 200 pips within one day. Very heavy acceleration against the main trend. Like I was saying, that probably means that firstly, many long positions were closed out at this level once they realized that the breakout to the upside didn't quite happen. Okay, once they realized that there were the bulls didn't have any momentum left, any gas left in this market to keep pushing up, what they did is they basically closed out all their positions there, and price, bang, fell down 200 pips to the downside. And second, the bears that were waiting to enter in this market, this was their opportunity. Once they saw the fake breakout, okay, that not the fake breakout, actually the breakout did happen, but they could not go through the continuation of the actual breakout. That was their signal to basically they realized this breakout had fizzled away. Okay, that's why it's always so important. I always mention that's important to wait for the breakout, pullback, and continuation aspect of the breakout, because the continuation aspect of any breakout is what actually confirms the breakout in itself. Okay. Trading the fast breakout is always very risky because you don't know whether the breakout is is solid, is actually a strong breakout, or it's just basically a half-assed breakout, such as we've seen in this case. Okay, what you want to do is you want to wait for the actual confirmation, place your buy order there, and if it does happen, if the continuation actually takes place, you know that there will be many bulls, many buy orders, buy stop orders around this area, pushing price in your direction. Conversely, in the other hand, if the continuation fails to happen, expect a heavy drop against the trend due to bulls panic and due to bears showing up in this market. Okay, those two reasons I was mentioning before. That's why I always say that the dynamic area of support and resistance, once price in a trending scenario retraces back to the moving averages, it's a decision taking area, and from that we are to determine, well, the chart is, the market is to determine whether the trend will continue or whether the trend will weaken down significantly. All right, always keep an eye, a close eye, follow price in real time once the retracement back to the dynamics to the dynamic area has actually happened. Well, because you will have clear indications, okay, whether this trend is still strong, whether you want to still be looking for long entries, or whether it's time to, whether it's time to realize that this is not looking good anymore. Okay, the bears are now showing more strength. They are stronger than the bulls. The bulls have sort of chickened out, okay, failing to break to the upside. They've basically chickened out, bailed out of this market, and they opened the doors for the bears to charge in and regain control of this market. Okay. Alright, folks, that's basically all I have for this video. To recap in a little bit, keep an eye on price action around the area of the area around the moving averages. Sorry, more often than not, it will give you a clear indication. Once you become comfortable and accustomed to price reading, they will give you early signals of whether you want to still be looking for trades in the direction of the trend, or whether the trend is actually weakening and the dynamic area is giving way. Okay. And therefore, once this happened, okay, once this breakout took place, in my opinion, as far as I'm concerned, as a trend trader, remember that in the setup chart the trend was clearly up. As a trend trader who only trades in the direction of the main trend, once this happens, okay, once the breakout didn't quite give way, the only decision for me to take as a trend trader once again was to cancel the whole setup. In fact, like I say, up on the breakout pullback, I was waiting for price. I had my sound alarm placed up there in order to, to search for a long entry at this level. Once I saw that price failed to take out this high, I was beginning to get very nervous about this setup anymore. It was not quite looking good anymore. Like I say, once price failed, we had few different days. Actually, let me zoom in a little bit so you guys can see how price topped out at that level quite a few days in a row, actually 4 days in a row. This was Monday's price action, this was Tuesday's price action, Wednesday, Thursday, and as the breakout happened on Thursday, it was a clear signal that Friday was gonna be a bear's day, a bearish day. It was very clear in my opinion. Once I saw actually that on Thursday price failed to break above all these highs, okay, the high for the week, which was the 147.50. In fact, if you want to go back into my blog and read my entry for this day, which was the 11th, I think it was the 11th. Actually, let me see, the 11th or the 13th. It was the 13th of December 2007. If you want to go back to my blog and read that entry, you will see how I mentioned on a live video that price was failing to take out this level, the 147.50 level, which had been the top, the highest point for multiple days throughout the week. Price just could not breach through, and I stopped to consider any long entry in this scenario, because like I say, things were not looking good anymore. Okay, there were no momentum whatsoever to the upside. If there had been bulls enough to buy orders enough in this market to push price to the upside, it should have happened already. Okay, it should have happened already. When price begins to meet up on a breakout, okay, always remember that in my opinion, a breakout must be a clean breakout, then you have the pullback, and you must have another clean continuation move. If instead of that you see price moving sideways for days upon days, in this case 4 following days in a row, beware, all right? Let the warning alarms, the warning bells warn you in advance, because something is not quite right in that setup. And like I say, once I saw price breaking in momentum, have a look at that momentum bar, that long red bar in the second half in the New York session of Thursday. I knew for a fact that the Friday was actually going to be a bearish day, but I don't trade against the trend. Is one of my main rules. Actually, it is indeed my main rule as far as trading goes. So I decided to, not bet short on something that in my opinion was very clear. I knew, like I say, I had all the indications that this breakout was going to fizzle away when I saw all the week long this level working as resistance and price not being able to breach through any of the days. Okay, once the breakout took place to the downside, it was clear in my mind that we were to see on the following day a momentum drop to the downside. But anyway, I do not trade against the trend, so I did not consider that possible entry. But anyway, guys, what I'm trying to say here, what I'm trying to point out is the importance of price action reading again around the dynamic area of support and resistance, and how it usually can warn us in advance whether we are about to enter a sound position in the direction of the main trend, or whether the trend is actually weakening, price breaches through, and from that the whole setup is cancelled. Okay, alright folks, that's all for this video. As usual, if there is anything you don't understand, please feel free to send me an email. I will very gladly give you my feedback. Okay, bye bye. Hi guys, this is Sector. Welcome to another video of my trading course. In this video, I'm going to show you another approach to basically my regular swing trading type of trading. All right. Of course, all the core principles of my system still apply. It's still trading in the direction of the trend. It's still trading in the direction of the moving averages. It's still trading according to my 3 simple moving average trend filter condition. Remember, all the moving averages in order, all of them pointing in the same direction, somewhat parallel to each other, etc., etc. Okay, so the basic principles of the trading remain actually the same. The only thing that changes is the actual entry. All right, the way as of how I pull the trigger. Okay. This second way of entering swing trades is basically based on limit orders, okay, as opposed to the method that you've just seen on the chapter number 3 on the course. It's not about searching for reversal formations of the dynamic area of support and of a different elements forming a confluence of support. Okay, it's basically relying on limit orders upon one specific level. So when price reaches that level, our limit orders get triggered immediately, and therefore we are effectively positioned in the market. Okay, as usual, of course, in the direction of the main trend. I'm going to show you now with one example. Okay, in this case is the USD JPY on the daily chart, the Japanese yen, okay, against the American dollar, or rather the American dollar against the Japanese yen, to be accurate. And I'm going to show you exactly what type of conditions you require in order to apply those limit orders into a real live trading scenario. Right? Okay. Let's get down to business. Limit orders, as you know, is an order in which you tell your broker, fill me in at this precise price. Okay, not at market price, but at a specific price that I'm going to predefine myself. All right. if you are in an uptrend, okay, as in this case, and price is trading at this level, you've got two ways of entering long other than a market. Well, there are many ways of placing your limit orders, but this precise what I'm actually going to teach you in this video is what we call the limit buy order. Okay, so let's assume we are in an uptrending scenario such as this one, okay, and price is around here. The moving averages and the support area you want to buy from is down here, okay? So basically what you do is to tell your broker, okay, place a buy limit order right above this area, right above that. Let me zoom in a little bit for a clearer view. There we are. Okay, so let's assume that the 119 level, for example, okay, it's a level where many different elements of support come together within a few pips of each other, and therefore we have a confluence of support at this area. Okay, so basically the idea is to place a buy limit order right here and a stop loss immediately below this level, perhaps 10-15 pips below that level, no more. It depends on what time frame you're trading off, of course. If you're trading off the 30 minutes chart, you can't you can definitely tight that stop loss much tighter than if you are trading, as in this case, off the daily chart. Okay, if as usual, the longer the time frame you're trading, the bigger the breathing room you need to give a trade. Okay, but nonetheless, this technique doesn't require long stop losses. Okay, actually, it's the idea is to not to place long stop losses. Okay, all right. Let's go back into this chart. Okay. We are going to focus on this last swing of the chart. All right. As you know, at this precise level, at the 122 area, we have a number of elements of support coming together. Okay, let me zoom out again. We have first of all, as usual, we have the dynamic area of support, all right, between the 30 and the 50. Second, we have this trend line. That's awfully drawn, sorry. We have this trend line right here. Okay, if we prolong this trend line, it comes around this level. Good. We have this swing top, okay, right there. Former resistance, once broken, might become support. Okay, good. We have the 61% Fibonacci level. All right. That's another element of support in our favor. And finally, we have the 122.00 round number. All of those elements, like I said, come together in the area of dynamic support. Okay, so that 122.00 level is indeed a very strong element of support. Okay, very strong element of support. There's going to be loads of buyers waiting at that precise level for to enter the market in the long direction. Okay, plenty of them. As I say, imagine Fibonacci traders are liking this level because there is a one Fibonacci level there. To be exact, the 61% Fibonacci level. All right, support and resistance level. Supports and resistance level traders also like that level because it's a former level of resistance. As I said, once broken, it might become support. Okay, trend line traders also like that level because we have one trend line around that level. Okay, and also round number level traders also like that level because, well, we have the 122.00 round number right there. Okay, so as you can see, we have plenty of elements coming together within very few pips, about 10 to 15 pips of each other. Okay, so what's the idea? The idea, let me zoom in even more, right there. Imagine price was somewhere in here. Okay, this swing has topped out, and now we are beginning to retrace back down. Okay, the idea is to identify where is the level of the strongest support. Okay, in order to enter this market, we have already said that it's the 122 level. Right there, many elements of support coming together within few pips. Okay, so we would place a buy limit. Okay, few pips above this level, perhaps 122.15, 122.10. Okay, right there. And our stop loss would be just very few pips below this 122.00, perhaps 121.90, 121.95, more or less 121.90 would be a good place to place your stops. All right. So the limit entry would be at 122.10. The exit would be the stop loss would be at 121.90. So we are talking about a 20 pips stop loss plus a spread. Let's say a 22 pips stop loss. All right. That's very small considering we are trading off the daily charts. Okay, it's pretty tight. It's pretty tight. Actually, if you would be trading off the 10-minute of the 30 minutes chart, that stop loss can be reduced as much as even 10 pips. Okay, like I say, this strategy requires very tight stop losses. Okay, because it's all about statistics. It's all about probabilities and a risk-reward ratio. Okay, I want to get into that. Let me please finish my point of the entry, and I will explain you what this strategy is based on. All right. So basically, the idea, like I say, is spot out the strongest level of support. Okay, the strongest level of confluence of support, as usual, within the dynamic area of resistance. Of support, and to place a buy limit order just few pips above that. Okay. As price retraces down and reaches this area, our broker would automatically fill us in at that level. Okay, automatically place our stop loss right here. Okay. So here's the idea. The idea is that this level is indeed going to hold the retracement. Okay. Of course, we don't know whether it's going to hold a retracement, but we do know that there are plenty of elements of support at that level. There are plenty of buyers at that level. Okay, price usually when it reaches this an area of strong support. Okay, many orders are punched in the market, and price always sees a retracement. Okay, or a bounce off that level. As you can see, immediately after touching this level, okay, we've seen like a 50 pip bounce up to the upside. Okay, please always bear in mind that this is a daily chart, and 50 pips on the daily chart is nothing. Okay, if we were talking about the 30-minute chart, that bounce would have been 10, 12, 15 pips, no more. Okay. So here's the idea. The idea is to get filled in right above that level. All right. Let those many orders that are waiting in the market to be punched in, just like yours. Okay, many limit orders, get a quick bounce to the upside and quickly move stop to break even. Okay, you entered this trade right there. All right. Oops, sorry about that. Right there, you were filled in the market. Price, because all those limit orders that are waiting to be punched in the market, just like yours, we see at least a short-term bounce to the upside. This happens very often, guys, very often. All right, we see a quick bounce to the upside, and what we do is basically move a stop to break even as soon as price has run 10, 20 pips in our favor. Okay, once again, depending on the time frame. All right, but nonetheless, that's the idea. We are getting immediately filled upon touching this level. Many orders are filled in the market. price sees or goes through a small retracement, a small bounce to the upside, at least for the time being, and we have breathing room enough, perhaps 10-20 pips, to move a stop to break even. Okay, once we are at break even, well, it's a free trade, no worries. Price might turn around and break this level, the 122 level, or a whole new swing to the upside might be created. I don't know, you don't know, no one knows. All right, no one knows what price is going to do. The idea, like I said, is to get filled in at the most optimum level, very few pips above that level of confluence. Price bounces to the upside due to those limit orders being like yours, which are, trust me, there are thousands of limit orders punched in the market at that precise level. We see a small retrace, we move a stop to break even, and then it's a risk-free trade. Okay, after that, well, you might get lucky, you might see price moving up in your direction, or you might get knocked out of the trade at break even. Nonetheless, it's a win-win situation, okay, or at least a win no loss situation. All right, that's the idea. All right, always in the direction of the trend, guys. It's important. You must have the market inertia on your back. You must have the wind blowing on your back, and blowing you in the direction of the pushing you in the direction of the trend. All right, so once again, it's crucial to spot a strong level of support. Okay, it's usually a good idea if a previous swing top, okay, is a previous swing top and a trend line and a Fibonacci level is lining up at that level. The dynamic area of support, since, well, it's not a specific level, but rather a band, okay, a band between the 30 and the 50 simple moving average. You can't really specify one precise level because, like I said, there's a big gap in between the 30 and the 50. You know that you want to enter within that band, but you can't specifically say at what precise level. All right, that's why it's always so important to have many other factors, such as a previous swing top, a Fibonacci level, a trend line, etc. Levels that you can pinpoint to the pip where exactly you should place your buy limit or a sell limit if you're in a downtrend, and basically just punch or place that limit order 5 pips above that, 10 pips above that, depending on the time frame. All right, and place your stop loss below that. Okay, if price doesn't react off this level and it's just basically breaches through that level in momentum, well, you are knocked out for a 20 pip loss, which is not too bad. Okay, which is not too bad. This entry system is all about risk reward. Okay, you're risking 20 pips, 25 pips to the downside, but the reward is, well, a whole new swing to the upside, which might be 60, 80, 100 pips. Once again, depends on the time frame. But for example, in this precise case, since it's a daily, we might be talking easily about 200, 150, even 300 pip swing. Okay, so basically you're risking 20-25 pips in order to gain 200. That's a very good risk-reward ratio. Okay, perhaps this kind of system might fail once, twice, 3 times, but whenever you get a nice entry, okay, whenever you get it right, the risk-reward is like 1 to 5, 1 to 10, or even better. All right. So like I said, it's crucial to have one specific level to base your entry on. Like in this case, it's very clear. You see the previous swing top comes at 122.10. The 61% Fibonacci comes at 122.5. Right below that, you've got the round number at 122.00. Okay, the trend line right there comes exactly at 122.10 as well. So all in all, and of course the dynamic area of support. So all in all, within 10 pips, you have 4 elements of support. Okay. that means that it's very, very probable that you might see a bounce to the upside, at least a temporary, short-term bounce to the upside, just enough to move your stop to break even very quickly. Okay, you've got to be very nimble with this kind of trading. Okay, you get filled in, price moves up 15 pips, bang, stop loss to break even. It's a free trade. Okay, no sweat. That's what this system, what this entry approach is about. Okay, first of all, a very positive risk versus a reward ratio, and a stop loss to break even very quickly upon the first initial bounce, reacting off that level of confluence of support. Okay, and like I say, even if it goes wrong, even if price basically breaks through, you get filled in the market and price keeps dropping like a rock, okay, you've lost what, 20-25 pips. All right, I think if you can master this technique, okay, it can become very profitable. All right, like I said, you might get stopped out once, twice, but whenever you get it right, you are getting an enormous reward out of a very small risk. Okay, and like I say, please guys remember that most of the trades, if you are to be kicked out, you will be kicked out at break even. Okay, you enter right there, price immediately shoots up, move a stop to break even, and then, well, you know, price might drop down. I don't know. What I do know is that at least, you know, I'm taking no risk on this trade once I've moved my stop to break even, and it usually happens. Okay, it's very common to see a quick reaction, at least a short-term reaction. That's why I said you've got to be very nimble. Okay, you've got to be right in front of the chart in order to move a stop to break even. Once you're at plus 15, something like that, plus 20, depending on the time frame, guys. Always remember that you've got to remember what time frame you're trading, you are basing your trades off. Okay, if you are scalping the market, if you're trading off the 15-minute chart, something like that, move your stop to break even once at plus 7 pips in profit, plus 8 pips in profit. Okay, don't wait anymore. But if you're trading off the daily, well, perhaps you may want to give it a little bit more of breathing room, plus 15, plus 20, no more. Okay, upon that initial bounce, which like I say, it happens very often. Okay, those limit orders waiting to get filled in, they all get filled in at the same level. Okay, they all get filled in at the same time, and price reacts off that. You usually see, like I say, a quick bounce. You see this green bar that right there, or even this red bar. Okay, price reach down, touch this strong level of support, and you see where it closed, this bar. Okay, this was the touch, this would be where we would have gotten filled in, and look where this this bar closed. Okay, you have like 20 pips there to move a stop to break even. Perhaps in this case you might have gotten stopped out in this next bar right there, stopped out at break even, but nonetheless it's a break even trade. Okay, it's worth to give it a try. Okay, because most of the times either you get stopped out at break even, or you may see a whole new swing to the upside for a very tight risk. Okay, barely 20-25 pips, and you could have easily moved stop to break even here. Okay, it's a very common phenomenon. I see it every day, that touch limit orders get filled in the market, bang, rebound back up 20-30 pips, move a stop to break even. Hey, that's it, no sweats. I'm riding a risk-free trade. I don't care anymore what might happen from now on. Okay, like I say, that quick temporary rebound to the upside or to the downside if you are in a downtrend, basically off that level of confluence, happens very often. All right, alright guys, that's what this technique is about. Okay. Now I've got to be honest with you. This is not a conservative type of trading. Okay, this is just not a conservative type of trading, because you're not waiting for the confirmation, you're not waiting for the reversal confirmation. All right, you are not waiting for the retracement trend line breakout, you're not waiting for that, you are entering right here, you're not entering right here upon the breakout of this trend line. Okay, you're basically anticipating the market, or trying to anticipate the market. That's always risky. All right, guys, I don't want to lie to you. This is, first of all, it's not so easy to master. Okay, it doesn't happen very often, because like I said, you've got to have a very strong level of confluence. You've got to have many elements of support coming together at one specific point in the chart. But once you've gotten the grip of it, once you're accustomed to this technique, you can easily move a stop to break even if you're nimble enough. Okay. But like I said, please always keep in mind that this type of technique well, basically carries a higher degree of risk. Okay, you're not waiting for a reversal formation, you're not waiting for price action confirmation, you're not waiting for a retracement trendline breakout. Like I say, you are basically anticipating the market. Okay, you are entering a position before the market has showed you the next move. Okay, that's always risky. I don't want to lie to you. All right, so my advice before entering any live trade based on this technique, please demo. All right, always demo a number of trades, 10, 15, 20 trades, and once you believe once you've achieved good results, once you are comfortable with this technique, then go live with very small lot size. Okay, very small lot size. Nonetheless, like I say, you're trading a higher degree of risk technique. Okay, and well, you don't want to go a commando, you don't want to go berserker from the very beginning, using a new strategy that, first of all, you're not accustomed to. Second, it holds a higher degree of risk. Okay. Nonetheless, it's a strategy that works. Okay, I personally don't use it very often, because I'm a conservative trader, and second because I do enter the trade with a higher than usual lot size. Nonetheless, it's all about how much risk you're willing to take, and also how comfortable you feel with entering the market without waiting for the confirmation. The limit order technique does work, but only once you've mastered it. It's a little bit like the London Open breakout type of trade. Okay, you will learn all about it in this course, or at least the way I trade it. The first thing I say on that chapter is that, guys, please be careful. This is a high momentum technique, and it's more difficult to trade than let's say a triangle breakout. It's just more difficult. Okay, so make sure you've traded plenty, you've taken plenty of demo trades before going live. Okay, well, this is the same. Okay, this technique does work, but be careful at least at the beginning. All right. Okay, guys, that's basically all. Now I recommend you to go through many charts, try to spot different areas of confluence, of support or resistance, depending whether you're in an uptrend or downtrend, and check by yourself, verify by yourself that if you do have a strong level of support or resistance, you will see that price, upon touching that level, you always see a quick bounce to the opposite side. Okay, in the other direction, just enough to move stop to break even. Okay. Yeah, trust me, it does happen. Okay, and in order, but you gotta believe it yourself. Okay, don't trust what I say. Go back in the charts. Okay, spot those areas of confluence. Okay, with previous swing tops.
trend lines, Fibonacci's, round numbers, etc., and you will see that you always get, if they all come together within a very tight area, you always see at least temporary a bounce to the upside, just enough to move a stop to break even. All right. Okay, guys, that's all for this video. Any question? Okay, any doubt you may have, please feel very free. You're very welcome to send me your charts, your emails. Okay, I'll gladly give you my feedback. All right. Okay, guys. Cheers. I'll see you in the next video. Bye bye.
Hi guys, this is Hector. Welcome to a new video of the course. In this video I want to show you how to follow or how to perceive early signals of warning, as of how we can get alarmed, or we can get warned in advance that the actual trend might be in danger or might be about to collapse. Okay. Oh, perhaps not to collapse, but at least jeopardize enough for us to not want to take any, or not to want to search for long trades anymore on that trade. Okay. Right now you're seeing the chart for the New Zealand against the American dollar. It's the 4-hour time frame. As you can see, it's a very clear uptrend. Okay, have a look at those beautiful moving averages, nicely pointing up, parallel to each other. In fact, if we keep zooming back, you can see that this uptrend has been coming from all the way from a long time. Okay, right from here all the way up, very beautiful uptrend information. Okay, no crossover. The moving averages don't cross over each other at any time. Price is keeping well away from the 100, spending most of the time above the 50 simple moving average, which as usual is the one in red. How price is very harmonically swinging off the dynamic area of support, which as you guys know is the area between the 30 and the 50, taking off again for a whole new swing to the upside, etc., etc. All right. Alright, but so we keep, let's assume we keep on riding this uptrend, searching for long. Some trades will be losses, most of them will be winners, since we are trading in the direction of the main trend. Okay, but now we open up our charts today. Let's assume we open our chart today and we see this. Okay, right there. Let's assume this is a live chart. Okay, this is today's or the actual, let's assume, is the current market price at this level, and let's try to read what's going on in this chart. Let me squeeze that in a little bit. All right, so we've been seeing a very nice uptrend. Every time price takes off, makes a new high. Okay, have a look how it makes a new high, retraces back down, scores a higher low, takes off once again, higher high, higher low, higher high, higher low, higher high, higher low, etc., etc. But now what do we see? We see a lower high. We can't take the previous high before beginning to retrace down to the dynamic area of support. Okay, all right, fair enough. This swing didn't really have that much momentum, did it? Now it's retraced back all the way to the area of dynamic support, to the 50 simple moving average. Nonetheless, we see that still price is not breaching through the 50. So far so good. We are technically wise still in an uptrend. So we take off for a whole new swing to the upside, but whoops, we cannot. Once again, we cannot take out the previous resistance levels. In fact, we are making a triple top. All right, triple top. All right, that's that's getting trickier actually. It's all right that one swing doesn't really carry that much of a momentum. Yes, this swing didn't. Well, it did take out the previous swing low, but barely for a few pips, perhaps 10 pips, something like that. Not really taking out the previous swing for a for a long run. It actually just barely peaked out 10 pips above the previous swing high before retracing again and gathering momentum once again for a whole new swing up. This could perfectly be the case here. Okay, well, okay, fair enough. We just didn't have the energy enough. The bulls were a little bit tired at this point, needed a retrace all the way back down to the dynamic area of support. Then try it again, but for a third time they just cannot make it. Okay, these guys are getting exhausted. They are getting tired, and well, it's time to begin to read price action. As you guys know, one of the conditions for a healthy trend is that all moving averages are pointing in the same direction, all of them pointing in the same direction, all of them pointing always in the same direction. But have a look here, have a look at the 30 moving average there. It's totally flat, you see? It's totally flat, you see that? Have a look at the last portion of this chart. Okay, it's totally moving sideways. Moreover, we have a momentum break of the 50. Remember that the 50 simple moving average is the one in red. Okay, here we just have a quick pierce below. Okay, not a big deal, there's no momentum there, just a quick pierce below. Immediately after it shoots up to the upside again above the 50, same as here. Okay, we sort of like we stop the we poke the 50 very quickly for 1 bar, but immediately after we shoot back up. But here, this is a momentum breakout. Gotta read price action, guys. Price action reading is crucial for trading. Okay, it's very important. We have 2 clues here. Actually, we have many clues. I will go through all of them in detail. Triple top, we just cannot breach this level. We definitely don't want to enter long until we breach that level to the upside. Moreover, breakout of the 50, guys. Remember, I always say that the 50 simple moving average is like a cat. Okay, if you keep messing with a cat, if you keep pulling its tail and teasing him, and kicking him in the balls, sooner or later he's going to scratch you back. While the 50 simple moving average is something like that. You can cuddle the 50, right? You can cuddle the 50, but you don't want to pull its tail. Okay, because you will get scratched. Don't pull its tail, cuddle him, cuddle its back. That's all right, no worries there. But if you get rough with the 50 will get rough at you. So momentum breakout, flat 30 simple moving average flattening sideways, triple top. Okay, at this time it's clear that we may not want to search for long entries anymore. All right. Moreover, let's go keep on unfolding the chart and moving sideways. We are getting too close to the 50. You see that? All this time around we've been nowhere near the 50. Sorry, the 100 simple moving average. Sorry guys, I meant the 100. We've been nowhere near the 100 simple moving average. That's all right. It's a signal. Okay, it's an indication of a clear, of a healthy trend, let's say. All right, when price carries momentum enough to keep pushing away itself away from the 100, it signifies that the bulls, in this case, if we're in an uptrend, or the bears, if we were in a downtrend, still have the control of the situation. They still have, they are still the bad boys on the block. Okay, they keep pushing price in their direction. As soon as that situation actually turns around and the bears continue or resume, regain, sorry, I couldn't find the right word, regain the control of the situation, dives back down and begins to near the 100 simple moving average. Okay, well, if I was saying before that the 50 simple moving average was a cat, well, the 100 is a dragon. I was saying before how you don't want to mess with the 50. Well, you certainly don't want to mess with the dragon, do you? All right, silly analogy, I know, I apologize for that, but it's important for you guys to know that if you get close to the 100, things are running out of control. Moreover, have a look at the 30 moving average. It's already curling down. You see, that's already curling down. Moreover, the 50 is what is already flattening. Before we had the 30 moving average flat. Now we have the 30 pointing down and the 50 flattening. It's not going to take long for them to cross over, is it? Moreover, it's not going to take long for the price to breach the 100. Right? Okay, let's keep on moving, unfolding our chart and see what's happening. Okay, keep on going. Too many closes below the 50 simple moving average. All right, as I was saying, a quick pierce below, it's all right. When you get 1, 2, 3, 4, 5 closes, 5 bar closes below the 100. Oh man, be careful there, be careful, because the trend is definitely weakened. Moreover, we have a crossover there. Moreover, we finally breached the 100. The party's over. Okay, in fact, we are now ranging. We are trending no longer, guys. Trending no longer. We had been trending up to this point. Let me clean up the chart a little bit. We had been trending from up there all the way from here, okay, all the way from here. At that point, right at this point, the moving averages begin to fall in order. Actually, not yet there, because the 100 was not still pointing up at this level. All right, at this level, the 100 was already curling up, all of them pointing in the same direction, all of them parallel to each other. No crossover so far, all the way from this point onwards. Okay, from this point onward, we want to be searching for long entries, long swings. You see those beautiful swings of the dynamic area of support? Okay, you see that beautiful swing information. You want to be searching for long entries there. No shorts. Okay, forget about shorts. Your moving averages are telling you to go long, so search for long entries, and all the way up to that. At this point, okay, we get clear signals that we don't want to search for long entries anymore. So we've been profiting quite a while all the way through. All right, we're definitely profiting from here. Okay, all the swing information, we've definitely been profiting most of the swings. Since we've been looking for long entries, most of our trades should be winners. Okay, perhaps we might score some losses due to, well, improper stop loss placement or stuff like that, but most of the trades, 60-70% of the trades should be winners. All right. All the way up to that, and up to here we have clear signals in advance. Okay, we had the triple top, we had the momentum bridge. This is crucial, guys. You're gonna read price action, especially for momentum breakouts. It's very important. You guys know that in stuff like, for example, stock trading or futures, you get the volume. Okay, you have the volume to analyze whether a breakout is carried in volume or not. In forex, we don't have volume. Okay, or we don't have let's say significant volume indicator, because it's not a centralized market. So you can't really trust on any volume based indicator. So what you've got to do in order to offset the lack of any volume indicator is to read the momentum. Have a look. This probably was a very fast bar. All right, price was dropping down like a rock here after a very nice uptrend, after a triple top, moving averages flattening, momentum breakout, crossover there, guys, crossover there. That's the confirmation, in my opinion, the confirmation of the end of a trend, or at least let's say in weakening of a trend is when we get the breach of the 100 and the crossover. The party's over right there. The party's over. Moreover, the 50 usually warns us in advance whether we are, we might want to hold our horses. If we were up here, this was current market price, let's say, and we were searching for a long entry, and we see this very bad, massive red bar breaching through the 50 simple moving average. At this time, it was time to say, all right, man, I don't want to search for long entries anymore. Have a look. We're ranging already. We're ranging already. The only way we would consider searching for a long entry here is if we broke above this triple top once again, and the moving averages began falling in place in order again, pointing in the same direction, etc. This is not the case, though. Okay, this is not the case. Not only price breaches plummets down across the 50, not only it breaches the 100, we get a crossover. That's it, the party's over, guys. At this time, if you let's say you wake up in the morning, you fire off your charting platform, you begin searching for trades, and you pull out this chart, the New Zealand against the American dollar chart, and you see this picture, all right, just tell yourself, right, Hector, the party was very very profitable all the way through, but it's time to call it quits. Okay, it's time to say goodbye, all right, and get out of there, or simply not search for any long entries anymore. Read the moving averages, guys. Read the price action around the moving averages. Okay, have a look. Many multiple bar closes below the 50. That's important. Okay, guys, remember, this is all right. Okay, you can cattle the cat, you don't want to pull its tail. All right, many closes below the 50, it's not okay. The retracement is too strong. You want this kind of retraces, down here, down here, down here, down here. That's all right, but you do not want this kind of retracement with momentum bar to the downside, many bar closes below the 50, and finally you get the confirmation. This the first indication, okay, that you should be careful, that you should not be wanting to search for any long entry anymore until that triple top gives way to the upside. And this is your confirmation that once this happens, once you get the breakout and once you breach the 100, the only possible action you could take in this chart is to click on this X up here. Just click it and forget about it. The trend is in danger. The trend is not healthy anymore. You don't want to deal with the chart anymore. I don't know what's gonna happen now if I scroll on my chart. Okay, I don't know if this is going to go down or whether it's going to go up. Trading, as I always say, is not about predicting the next move. It's about reacting to whatever is happening already. And what is happening right now, it's indeed a breach of the 100, a crossover, a triple top, momentum breakout there, etc., etc. Okay, I don't need to have a crystal ball and try to guess whether the next swing is going to be to the upside or to the downside. I don't care. What I do know is that this beautiful uptrend is now in danger, and therefore I don't want to put in danger my money. I just don't. Okay, I was willing to risk my money all the way up here, but now I am getting conflicting signals. I don't want to risk my money no longer in this market. Okay, alright guys, that's all for this video. Just to sum it up, to wrap it up, read breakouts, momentum breakouts with multiple bar closes below the 50, alright, in the wrong side of the 50. Read whether we are getting close to the 100. Okay, if you get close to the 100, be careful. That's not nice. The 100 is the dragon. Get away from the dragon. The crossovers means that the moving average are not parallel anymore, and if they are not parallel anymore, you know, the trend is just not a trend anymore. Have a look at this chart. This is not a trend anymore. All right. Okay, guys. Just like I say, this was just a video to let you know how I personally signify, or how I identify the ends of a trend. Okay, I don't need to search for many trends. I don't need to draw. I mean trend lines. All right. I don't need to begin drawing trend lines. Have a look at that. Okay, we have a trend line here. If I drew trend lines, in my opinion, I would still be with the trend. Okay, you see, retesting, linking these two lows and retesting it right there. I don't know if this is going to go down or up. What I do know is that before this level, okay, before this level, I was warned here and I was warned there. Actually, just for the sake of it, let me see. Let's scroll through. Oh boy, ugly, very ugly. Have a look at that. Have a look at that. You see, totally moving sideways. Let's prolong the trend line. Okay, the actual trend line breakout happens there. Alright. However, I knew here and here and here and here, I knew in advance that this trend, all that beautiful trend up there, I didn't need to wait for this breakout, which happened many bars before I got my warning signal. Okay, if you draw your if you follow the trend by the trend lines, you got your warning here. Okay, if you follow your trend with the moving averages and reading price action around the round numbers, you got your warning there. Okay, as you can see, you know, quite a number of bars in advance, isn't it? This could have easily turned as a losing trade if you traded this bounce up here. Well, this definitely would have become a losing trade. However, if you were reading the price action around the moving averages, okay, you had the 30 flat here, like I say, the 100 being breached, the crossover, etc., etc., momentum breakout, many bar closes below the 50. You know, it's you don't need to wait for this. You don't need to wait all the way up here. Okay, you knew here that this trend was in danger, and in fact, have a look what's happened. Have a look what's happened. It's already pointing down. All right. Okay, guys, that's all for this video. I hope you from now on you keep an eye on those moving averages, especially the 50 and the 100, the flattening on the 30, the crossover between the 30 and the 50, or the price breaching the 100. All those clues will let you know in advance when the trend is about to give way, or at least it's weakening down. All right. Okay, guys, have a nice day. Bye bye.